What's going on, guys? My name is Richard, and welcome back to the Stock Market Outlook video. As always, we'll go through the analysis of the major indexes, the leading stocks in the market, and we'll also talk about how my previous watchlist performed, the sentiment surveys that I put out, as well as the IBD Big Picture, and of course the GMMA signal from wishweroutball.com. But before we get into that, I do want to start with kind of talking about what I did last week, because you guys found a lot of value in that based on the comments that I got. So let's go over to this page right here, and the only position I have right now is Fiverr, and it's actually only a 1/3 position at this moment. So last week I tried a few things like Tesla, DocuSign, with very short close stops, 1% stops, so either they worked or didn't, and I was stopped out. So you want, in this type of environment, what's kind of going sideways, the market is very choppy, volatile. If you're a swing trader like me, you don't want to get too aggressive and too overexposed, because it's easy to take a bunch of stop loss hits, and that will take away all the good profits that you made over the past few weeks. So in this market, I'm going in smaller, I'm keeping my stops a little bit closer, and Fiverr actually tried a breakout buy on Thursday, and then on Friday, it tried to move up. It was showing really good relative strength, relative performance to the overall market, but it did kind of fall back into the base. And one of my rules is when this happens on a breakout, I sell half of my initial position. So on this day, I bought a 2/3 position, but I did sell 1/2 of it on Friday just because that's my rule. And even though it was on lower volume than the previous day, this helps minimize my risk, especially considering the overall weakness of the market. And there's no harm in if it breaks out again for me to put that size back on, and I have no problem doing that. And just talking about the overall market, let me actually finish. So other than that, I tried a few trades, DocuSign against the 50-day moving average on Wednesday, but overall I was being very conservative, as I said, and taking smaller positions and cutting my losses very quickly. So if you're a swing trader like me, I think that's a good way to do it. Don't get too overly exposed, and if stuff isn't working, don't keep buying stuff. This is kind of covered in my interview with Ross Haber, which, if you haven't checked out, is fantastic. Ross is a former William O'Neill and Company portfolio manager, a former hedge fund manager, so he really knows his stuff, and it's actually a 3-part interview, so all 3 parts will be listed down below in the description. So if you have a spare 2 hours this weekend, I think you can learn a ton from Ross. I know I did from interviewing him. So check that out, and it'll also be linked above right now. And with that said, let's get into the analysis of the major indexes. So first, I want to shake things up and start with a day-by-day analysis of the QQQ. And I follow this index as the main one that I look at, simply because most growth stocks are very highly correlated with the QQQ. And overall, this was a shortened week. So on Tuesday, we gapped down once again after a big recovery the past Friday. And let me hide these drawings real quick. And we tried to move up, and everything was looking promising. Stocks were acting well, but then the floor kind of fell out, and we retreated back to the 50-day moving average. But we did find support at this 50-day and around this 270 level, which I'll talk about in just a second, why I think that's significant. Then on Tuesday, as I said, I tried a few things. Well, actually, this is Wednesday. I tried a few things because stuff was acting well. We gapped up and held it and fished in the top third of the trading range, a positive sign. And then this day right here, we gapped up. We tried to move through the 21 EMA, but that became resistance when it had previously been support throughout this entire run-up. So that's a character change for the QQQ. And overall, it's a very bearish outside day, meaning that the low is below the low of the previous day, and actually closed below that as well, and on higher volume than that update right here. And this update was on lower volume than the previous 3 big down days, which is significant. And then on Friday, we gapped up slightly, but once again, we couldn't really hold sustain a rally, and we actually finished below the 50-day moving average on the QQQ, and also on actually on the SPY, we held the 50-day. So relatively, the QQQ is underperforming at this time. It makes sense because growth stocks often lead the market up, but also have more potential drawdowns when the market goes bad. So from this bar, the expectation is we go sideways or down, and I would be very careful given that the QQQ is below the key 50-day moving average, 21 EMA, the 30 SMA, all those major kind of market trend moving averages. And I do want to point out the 270 level is very significant because you can see that back here, the downside reversal from 713 was right at that level. Then we had it be resistance once again on the 21st, and now it's potentially acting as support along with the 50-day moving average. So if this level gets taken out, I think this could extend to a deeper correction. I do not think it will be as bad as this drop right here because that was so recent, and at this point we are in a new bull market. So it's very rare to have two bear corrections right after the other. So at this point, I think this is a normal correction during a bull market, but if it takes out this 270 level, I will be much more conservative getting back in and really waiting for those fall through day signs. So that's kind of my take, and this 270 level is a key one to pay attention to, and you want to see the QQQ next week take back the 50 SMA. I think that's critical. But overall, you can see the weekly range was 23.2%. The daily range was 42.7%. So we've got some work to do before we start another uptrend. So that is the QQQ. And just looking at the channel that had been holding this move, you can see it's pretty much invalid at this point. So I'll go ahead and delete it. And overall, I think, at least for me as a swing trader, I have to wait for confirmation that this uptrend is resuming before I really get aggressive once again. And we'll talk about the leaders later, which is another sign that I'm looking for. I want to see those leaders hold those moving averages and start moving up as well. But that's it for the QQQ on a daily time frame. And let's go over to a weekly. And overall, you can see that, once again, this is a bad candle. You have a weekly closing range of 23.2%. It's closing in the bottom half of the trading range. So the expectation from this is we go sideways or down. And overall, if we go to this chart right here, you can see that we're below the 30-day SMA, which is very critical. But also, if we go to a weekly chart, we are still in a stage 2 uptrend, but we're no longer in a yellow band pattern, meaning that the price is above the 10-week and 30-week SMAs. So that's for the QQQ, and let's move on to the SPY. And overall, this also had a bad week. You can see we're down 2.48% with a weekly closing range of 26.3% and a daily closing range of 51.3%. And at this point, we are holding that 10-week SMA and also the 50 daily SMA. And at this time, we are still in a stage 2 uptrend, although we might actually, we are no longer in a stage 2 uptrend because the 30-week SMA is actually going down at this time. So you want to see that curl up once again to restart that stage 2 uptrend. And from this weekly bar, the expectation is we go sideways or down as well, just like the QQQ. So next up, we've got the IWM, the Russell 2000 index, and overall down 2.39%, weekly closing range of 23.7%, daily closing range of 43.6%. And this is not in a stage 2 uptrend because the 30-week SMA is decreasing, and the expectation is we go sideways or down from this point. So moving on, let's go to the VIX, the volatility index, and this was actually down, which is kind of correlated with the fact that the put-call ratio isn't rising even though the stocks are dropping fast, which is surprising to me. Usually you see fear come in and people try to protect their portfolio using puts, but we're not really seeing that this time. So the VIX is down, which is a positive, but overall the put-call ratio, which we'll talk about later on in the video, is a negative for me because it indicates that we maybe need a further push to the downside before people really get bearish enough to have a short-term bottom. So that's the VIX. We're down 12.62%, and we're still above this 10-week SMA, the blue line here. So I want to see it move back down and hopefully try to break below these lows right here. And moving on, we've got GLD, the gold trust, and overall this is pretty much basing right at the 10-week SMA, And overall, it was up on the week, up 0.45%, weekly closing range of 60.6%, a daily closing range on Friday of 29%, and overall the expectation from this bar is we go sideways or up. And moving on, we've got the FFTY, the Innovator IBD 50 ETF, and this looks pretty much the same as the QQQ. And overall in the week, we were down 2.28% with the weekly closing range of 25.7%, a daily closing range of 27.8%, and the expectation from this bar is we go sideways or down, and at this time it is not in a stage 2 uptrend. So that is the FFTY, and moving on, we've got the XLF, the financial ETF, and it also had a bad week, down 2.29% with a weekly closing range of 33.8%, and a daily closing range on Friday of 61.8%, and at this time it's not in a stage 2 uptrend. And overall, if we go to the daily Webby chart on the QQQ and also the major ETFs, you can see that we're no longer in a clear red, white, blue uptrend where the short-term moving averages in red are above white space, above the longer-term moving averages in blue. So this time it suggests that we need to base a little bit, and I'll get aggressive once we retake a red, white, blue pattern. And also checking in on the 50-day SMA check, and I'll actually move this. There we go. So this is the percentage from the 50 SMA that the QQQ is, and when it's above that 10% level or even 8% level, it's reason to be cautious. But now we're safely back below that level, and we're actually below the 50 SMA at this point. And also checking in on the Webby RSI, you can see that right now we're below the 21 EMA. So at this time, the Webby RSI is back to, well, actually, it's kind of in correction levels, but it's back below those caution signs of 4% and 6% if we go to the comp, the NASDAQ composite. So that's a good sign, and I want to see us retake that 21 EMA, which is very critical for the health of this uptrend. So that's a check-in on the major indexes, and now let's move on to the potential true market leaders. And overall, I will be changing up this chart, given that many of these are now living below the 10-week moving average, the 50 SMA. So expect some changes here, but these are the former leaders of the uptrend. And if these can recover and start moving up again, I think that would be a good sign for the overall market, which is why it's so important to focus on the leaders. That's another thing that Ross really recommended. Pay attention to which stocks are doing well and are leading the market, and especially pay attention to leaders that are bucking the trend and are doing well on bad days or are not losing as much as the overall market, like Zoom, DDOG, and Fiverr. So going through these, you can see that Tesla is still below the 21 EMA, so I want to see it retake that as a sign of a new uptrend. Chegg is now living below the 50 SMA. SE is below the 21 EMA, but above the 50 SMA. And a lot of growth stocks are doing this, and I want to see it break to the upside above the 21 EMA. Fiverr, as I already talked about, is trying to break out even during this correction. DDOG is living below the 50 SMA, and you can see the 21 EMA has crossed below that moving average, and it could be forming a double bottom pattern or longer term flat base at this time. And Zoom is holding up reasonably well, and you can see that I've got some alerts set here, and overall it's above the 21 EMA and is acting very well considering we're in a correction. Vive is also below the 21 EMA but above the 50 SMA. Nvidia as well, Apple as well. ENPH is closing just below the 50 SMA, but you can see some nice kind of upside reversal signs right here, so it could be finding support at this level. There's my dog coming in. Here we go. And moving on, we've got SCDG, which looks very similar to ENPH. Amazon, which is also closing below the 50 SMA. TTD is living below that at this time. Shop as well as below the 50 SMA. CrowdStrike is holding that 21 EMA, so it's showing relative strength. Okta below the 50 SMA. Twilio as well. ZS is closing just below the 50 SMA. So basically going through these charts, there's a lot of damage done, and it's going to need time to form back proper buy points, form some bases, form some flat bases, and then once that's done, we can restart the uptrend and see if those breakouts are working. So don't get too overly aggressive until those bases form the left side and right side of the base And at this time, as a CANSLIM trader, I'm being very cautious, and as a swing trader, I'm barely exposed to this market. And you can see COUP really breaking down on volume vastly below the 50 SMA. And you can see it actually found resistance there on Thursday, so that's a negative sign. So you want to see this start to move up and challenge this double bottom pivot at around 99.69. So that's my take on the leaders. They're showing signs of distribution and definitely need time to form up new bases. And I'll also be looking for new leaders to add to this list. And I will probably be replacing some of these that are living below their 10 weeks and 50 SMAs. So with that said, let's go over to my most recent watch list and talk about how it performed. And I'm actually surprised that it performed so well this week given the overall market weakness. But overall, OTRK was up 13%, Fiverr up 12.8%, CELH up 12.37%, and apps above 10% as well. And we did have 3 losers down here. But overall, going through the charts, OTRK, you can see, tried to break out and moved up from this Tuesday. And overall, it's hanging in there really nicely, still above the 21 EMA. So definitely one to watch for another potential breakout. Fiverr, we already talked about. CELH, you can see, is holding the 21 EMA, found support there on Friday. So this is one to watch, and you want to see it take out this point of resistance at 22.36 and eventually challenge all-time highs. Apps as well is holding that key 21 EMA. You can see I've drawn this downward trend line right here, and I'll set an alert at this time as well. So I want to see it move up, form another potential entry setup. Pins as well is pretty much holding that 21 EMA, although it's below it at this point, and you can see how the 50 SMA is rushing up to catch up to it. And I think that could be a catalyst once it finds support there, and it could finally break out into new all-time highs. Fastly, we already talked about, it found support down here, but eventually was rejected at the 50 SMA. TSM still going sideways and is looking pretty good. HEMP is also looking pretty decent, and it had a nice upside reversal this past Friday, finding support as 10-week 50 SMA. AMD is looking like it's going to go down to its 50 SMA. And lastly, we've got Etsy, which is now living below the 50 SMA, although it's not too far below. So if this starts to move up, it could form the right side of a potential flat base. So that is my weekly watch list. Overall, we had 4 winners over 10% and 3 losers, although they weren't too bad at all. So with that said, let's go over to now my sentiment surveys that I post on Twitter. So here we are at my sentiment surveys, and overall we saw a nice drop this week down to 38.1% bullish, which, since this is a contrarian indicator, is a good sign because it shows that fear is coming back into the market. And this is reinforced if we go over to the put-call ratio, because it is trending the right way, although I would like to see a flush to 1 and even 1.15 ideally. And also going to the bulls versus bears contrarian sentiment indicator, you can see that we're now below 60, although I would like to see it push down to 40 ideally. You can see that during the corrections in 2019, we saw it fall to around 45, so that could be kind of a target for the sentiment indicator. And also, if we go to the NAAIM exposure index, you can see we had a nice drop down to 53.09. This is a huge positive because it shows that hedge funds are getting more cautious and more bearish, which could once again be a contrarian indicator. So that's it for sentiment surveys. And moving on, we've got the IBD Big Picture article, and their headline is, "Will the growth stocks outside tech take over the stock market leadership?" And they talk about the pullback that we've already covered, talking about the indexes here. And you can see that they talk about how the S&P 500 finished mildly above its 10-week moving average, and the NASDAQ is just below the 10-week, less than 1% below it. And they also discuss how the FANG stocks finished below their 21-day exponential moving averages, which is a character change. And you've also got these former leaders, COUP, DocuSign, and Shopify, finishing further below the 50-day moving averages, which is bearish. But they also talk about a few potential stocks in the IBD 50 that are not tech-related and are doing quite well. So these should be ones that are on your watch list, and you should be looking for entries within these stocks. And then they discuss the economy down here, and overall their take is that this is currently an uptrend under pressure, and in terms of distribution days, we now have 5 on the S&P 500 and 3 on the NASDAQ. So that's it from IBD, and moving on, we've got the GMI signal from Which Blog, and it does say that it's green, but it hasn't been updated on Friday. and most likely it turned red on Friday given the overall market weakness and the closes below those key moving averages. So if you're a swing trader, this is another kind of warning sign that you should be kind of out of the market at this time. And if you're a position trader, you should be hedging against your longs using SQQ or another leverage ETF. And that way you can keep your core positions while still protecting yourself from drawdowns. So at this time, I'm being very cautious. My view is that there's currently a sideways market, which is a step down for me from uptrend under pressure. I think that we could be seeing a lot of choppiness in the near future, but I'm willing to change my view given any new information next week. So that's it for me. Thank you guys so much for watching. If you enjoyed and found this helpful, please go ahead and leave a like down below and subscribe if you're new to the channel. And I'll see you guys in future videos.